Hello, everyone. Thank you for tuning in again this week, and thanks for watching. Thanks for all your comments every week. I do read them all. I browse through them all. It's hard to respond to them all, but I try. Behind me, you will see my background is the eclipse. And of course, if you haven't heard already, in Niagara Falls, it was cloudy skies, not much to be seen. But where I was standing, I actually got a break in the clouds and got to take a few photos of the eclipse. And of course, I do have some bonus footage of a time lapse at the end of this video. So watch that. It's pretty cool to look at. This week, I do have an updated home buyer recipe that you don't want to miss. Some other major indicators on the house prices, too. And of course, I go right across the country to see how March ended up panning out for home prices and whatnot. First of all, I just want to get into the latest announcements from the federal government, the Liberal government, mainly Trudeau. He's making all sorts of announcements. One of them was about the prefabricated homes. And you've probably seen the video here. And he says this is the kind of innovation that's going to help solve the housing crisis. So he doesn't say it's going to solve it, but it's going to help solve it. Now, I kind of took a quick glimpse at this and I did some research, and prefab homes cost around the same per square foot to build, or to buy, I should say, than a house that's constructed on site. So I put this out to the Twitter world, and I'm going to read a couple of responses in just a minute. But from my research, they cost the same amount to build, anywhere from $200 to $450 a square foot. You still have to install the foundation or pour the foundation, which is a major expense. You still have to provide services or hook up the services, the sewer, water, electricity, natural gas, all the rest of those things. Their development fees are still the same. In my region, it's $40,000, which would be a bargain compared to some of the big cities. And the biggest expense, of course, is the land, which can take up to 50% in many areas. So the land you still have to pay for. And then I was brainstorming more, and I'm thinking, like, you're going to have to ship those materials to two locations. First, you ship them to the factory, and then the factory ships the completed product to the site. So there's double the shipping involved. So I just don't see how logistically prefab homes are the solution. I think maybe the point was that you can build more homes faster, whether you're building some on site and some in factories. So it's just more production capacity, but it's not going to solve the affordability issue. And the general feedback I got was very agreeable. Of course, there were some people who didn't agree, but generally it was most people agreed and they had some good points. And here's a few of them. This is from Imran. Every time I priced a modular build, it was always a premium over on-site construction with cheaper look/finishes, exception for northern communities. From Felix, 100%, several large builders have been involved with full-scale or partial prefab components to their builds for well over a decade, with absolutely zero improvement to home affordability whatsoever. From someone called me, my dad worked for Royal Homes for many years. They are a great home, but more expensive than an on-site build because of shipping, etc. Only advantage, it's a controlled environment. More costs because extra walls needed for support can only ship so wide and long. And lastly, prefab doesn't save money. I've worked on many of them, and every single one ended up more per square foot than conventional. So there you have it. The general consensus is that you're not saving any money. Yes, you might be able to increase production, but again, this is a political ploy by the politicians to try to make it look like they're doing something and they're solving the crisis. Meanwhile, they're not. Until prices come down, we're not going to solve the housing affordability crisis. Talking about affordability and prices, I did update my home buying recipe just today. And of course, if you've watched before, you know I've been keeping track of this. Every month or two, I do update it when there is something to update. First off, you have falling prices. Prices have been falling generally. I'm going to get into that more in a second with the major indicators, but let's move on to falling rates. Rates have not fallen yet, but it does have one battery bar because we've been talking about interest rates dropping. And of course, sooner or later they will. It is getting prolonged, but that's a good thing because you don't want them dropped too early because, yeah, prices may take off in the short term if that happens. Unemployment, this was a big one. This got another bar. I was waiting for this to go over 6%. We're at 6.1% as of the last announcement, which was Friday, which is a big jump over the previous month. And lastly, the mortgage arrears or delinquencies. This is from the Central Bankers Association. They track them and they seem to be trending up now. Before it was very close to the bottom, but now we do see a significant pattern where they are trending up, and it looks like those ultra lows are behind us. So, of course, that gets one battery bar. So, we're not quite there yet, but we're clearly headed in the right direction. Unemployment is rising. It may be an up and down road, but it is rising. Delinquencies are rising. Rate cuts are just around the corner. I'm hoping not to see them till later in the year personally, but that is still good news. And this chart will be full and ready to go with check marks all over it before you know it. Next, I just want to move on to some very important indicators or patterns, chart patterns that I've been studying. Now, of course, I have talked about the head and shoulders pattern. If you look at this, we've passed that point. Now, the dashed line that I've included here going up from the average price points here, the smaller dash line there, that is where I expect March data to be. We don't have March's data yet. It's coming out next week from CREA. So, but I'm expecting it's going to be up there somewhere. But again, based on that preliminary data from what I've seen from the provinces and regions I've already looked at, we are going to be at least in this bearish pennant. This is a chart pattern that will break to the downside, meaning prices will go down. The next scenario I have here is if prices, of course, they're going to increase in March nationwide. If they go up again in April, we might end up with a double top, which is a big bearish pattern too. And of course, that's also going to break to the downside. And the last pattern here is a bearish flag. And this is when prices may peak a little bit higher than last year, which would create a flag, a bearish flag. And of course, that's going to break to the downside. So no matter what scenario I've ran with the predictions going forward, and March is not really a prediction at this point. We know prices were up. We just don't know how much nationally at this point. Now let's get into the March data across the country. I'm pretty sure your region is going to be on here unless they didn't report, but most areas have reported. So here is the month over month change from February to March this year. How much did the average price increase month over month? But starting out here with Newfoundland and Labrador had a 3.5% decline month over month. Then Halton minus 2.5%, Windsor, Essex minus 2.3, York minus 1.8, Guelph minus 0.6, Saskatchewan pretty even, but a small decline there. And then the rest, we start heading into positive territory. Now, one thing I did notice is a lot of the bigger areas or bigger cities in GTA and in Ontario, they had a big February, so their Marches weren't as big. And the places that didn't have a very big February month over month, such as my region, they actually had a very big March. So they lag, of course, the big cities. But anyway, let's get into this here. Durham region just up 1% month over month. Then Brantford up 1.7. Chilliwack District 2%. Calgary up 2% or 2.2%. Province of Quebec up 2.3%. Toronto up 2.6% month over month. Montreal 2.8%. New Brunswick up 3.1%. Greater Vancouver up 3.3%. Edmonton up 3.4%, Cambridge up 3.6%, Victoria up 4%. Then you have interior Okanagan in BC up 4%, Hamilton, Burlington up 4.1%, London, St. Thomas up 4.4 month over month, Fraser Valley 4.5%, Peel 5%, Nova Scotia up 5%, Ottawa up 5.1%, Grey Bruce Owen Sound up 5.6%, Kitchener and area 7.1%, Kitchener Waterloo 7.4%, Southern Georgian Bay a big 10.9%, Berrien District 11%, Niagara region up 13% month over month, which is my area, which is insane. But again, we didn't move in February at all. Simcoe District up 13.5%. And lastly, the Lakelands, which is Muskoka and Cottage Country, they're up almost 20% month over month. But of course, that's because they have the ice melting and the ice out, and all the waterfront properties come for sale, and they're big price points. So we see this every year with that area. Next, moving on to the percent change from the peak. How much are places up or down? If you look at the bottom there, actually Calgary, they just reached another all-time high, up 2.2% from their peak, which was in February. Again, that was a record too from whenever it was before that. So they're setting all-time highs for 2 months in a row now. Calgary's hot, lots of speculation going on there. Watch yourselves out there, guys. Don't buy into the FOMO. Lots of investors thinking they're going to drive prices up. And what I can tell, it's not that much of a deal anymore. Sure, it's a big city with the lowest prices, or a major city like that with low prices compared to Toronto and Vancouver. But at the end of the day, it can only sustain so much there. And it seems like a lot of speculation, like I said. So starting from the top there, you have a lot of places still well over 20% from London, St. Thomas, Grey Bruce, Windsor, Essex, Southern Georgian Bay, Guelph, Durham region, Cambridge, and Brantford. A lot of those outlying speculative areas next to Toronto or close to Toronto, but not in the GTA. Well, the Durham region is, but still one of those outliers that you get a lot of speculation, a lot of run up in prices during the last few years or so. Then most places falling in that 10 to 20% range, starting with Peel, Halton, Kitchener-Waterloo, Lakelands, Fraser Valley, Hamilton, Burlington, Berrien District, York, Kingston, Simcoe, Niagara, Chilliwack, Interior BC, and even Toronto falls in there, but just over 10.7%. Ottawa down 10% from the peak. Victoria down 9.3. Nova Scotia down 4.5. Saskatchewan down 3.8. Newfoundland and Labrador down 3.5. I think they were even last month. Montreal only 2.1% from their peak. Quebec as a whole just down 0.8% from their peak. Greater Vancouver almost at an all-time high, only down 0.6%. New Brunswick tied their all-time high. Edmonton have tied their all-time high. And of course, as I already mentioned, Calgary up 2.2% from their all-time high, which was just last month. And the dollar changes, or most places are losses from the peak, starting at Durham region. They're still almost down $300,000 from the peak. Halton down $293,000. Cambridge down $262,000. Peel down $257,000. Southern Georgian Bay, they're down $245,000. Brantford down $244,000. York down $243,000. Guelph down $237,000. Fraser Valley down $230,000. Lakelands down $198,000, Kitchener-Waterloo down $192,000, and the list just keeps on going. Like, these losses are huge. I see them daily, people coming up in stories and emails about people losing money. So when you look out there and you see the market and there's multiple offers, well, that's really not the case. People have lost a lot of money because they overbought at the peak. Again, you just keep going down here. Even Toronto's down 131,000, which isn't a lot for their price points, but they're still down from the peak. Simcoe and District 120,000. My area down 117,000. Victoria around 100,000. Okanagan down 96,000. Ottawa down $75,000. Then you get into the places that really haven't lost a lot from their peak, but they haven't reached them yet. Nova Scotia down 21,000, Montreal 13,000, Saskatchewan $12,000, Newfoundland and Labrador down $11,000, Greater Vancouver only down $7,000, which is nothing for them out there. They're almost even, like I said. Province of Quebec only down $4,000. Then you have New Brunswick is even, Edmonton's even, and Calgary, their new all-time high is $13,000 higher than it was last month. Now moving on to the market balance. In the buyer's markets, we have the Lakelands, Interior BC, Okanagan, Southern Georgian Bay, Grey Bruce, Owen Sound, and the Kingston area. All the rest of those in between are in balanced markets. And then in the seller's market territory is New Brunswick, Hamilton, Burlington, Saskatchewan, Montreal, Nova Scotia, Province of Quebec, and Edmonton. And the overheated seller's market, as per their new all-time high, is Calgary. Tons of action there, and not enough inventory, I guess. They're building tons out there, I heard, but still not a lot of inventory compared to the demand. So that's it for this week. Enjoy the 12 or 13-second time-lapse video clip of the eclipse over Niagara Falls. And until next week, I'll see you then.